Well, now that I'm a Twitter star, I figured I should rehash some of the things. Not Twitter star, I'm sorry, a TikTok star. Unfortunately, there is no dancing. I'm not as good looking as some of the other pretty girls out there that are getting a bit more of a follow than I am. So maybe I might pull in some dancing, but who knows? So one of the things that we've seen to date is do we see some of these flows in general when we look at some of these opportunities on crude pricing. So one of the things that we said with Brent is that we thought Brent was going to live in that 83 to 87, 82 to 87 trading range. Some extensions we thought could get to 88, but really that was where we were going to live. And then the average for August was going to be 84 to 85. But then as we were saying, as we get into September, we're not going to break the trading range. It's just we're going to live a little bit lower of that. Let's call it that 82 to 84. And the average for September will likely be lower than it was for August. That is seasonally speaking. Seasonally, you have a lot of headwinds. You have slowdowns. You have turnarounds. You have things that are going to come into that. So again, you're naturally, this is what happens, but because of that loss of supply, that's going to keep us and put that, floor in there. But then that pressure on demand is going to keep us within this cap. So again, we do see that downward pressure, but not a meaningful break from these levels. So for those that trade, we were saying that essentially if you broke 80, once we broke 83 in Brent, good spot to cover shorts, look to go lean a little long, and then start to lighten up as we approach that 84 into 85 level as you start to go back through. So here's some of the important flows when we look at Russian movements. So this is looking at crude oil flows. So one of the things that we were saying is that you were going to get a big flip in terms of where are Russian flows from crude versus product. So they talked about how they were going to reduce some of their crude flows. You had a huge surge in product. Now that is starting to balance out. So we do expect to see a bit of a pickup in crude exports, not back to the highs that we saw at the beginning of 2023, but back to what we saw versus the end of last month. So it'll still be at the lower end, but you're starting to see some of these movements, and euros got a bit expensive. So because they got expensive and Iranian barrels got cheaper, you saw a bit of a pivot in terms of what people were willing to purchase. So you saw euros sales slow down, and therefore you saw this adjustment in terms of some of these flows here. And again, why are you going to dump these barrels into the market if they're just going to sit on a tanker? Rates did go up. You had the Wagner leader, I forget to say his name. I was practicing it with our producer beforehand, who is Russian, and she was trying to walk me through it. Przinging so anyway, his plane was shot down. He was on the manifest. There were rumors that he was supposed to be in Africa, but right now it's presumed that he was on the plane and he did die. It was an anti-aircraft missile. So if you want to call it friendly fires, if you want to call it done on purpose, you can go either way with it. But again, that is something that will put a little bit more risk in the market on a geopolitical basis. Russia did attack some of the export terminals for grains in Ukraine, and typically Ukraine has responded by attacking some of the oil export capacity and lanes. So again, this is going to be an interesting one to watch and likely keep some of the insurance rates a bit higher. Then when you look at some of the exports of refined products from Russia, you can see that they were very elevated. They've dropped down a bit. We do see this pivoting back up a bit, but not to the highs. And the reason why is because you're getting a big amount of exports coming from India and China, and you're starting to see that, again, kind of crowd out some of these other flows. So even though we did get a bit of a draw in Fujairah, we do see that as we will see that reverse a bit as some of these additional flows come from Asia. The ARB from east to west is still closed. So again, you're starting to see some of this bunch up, and that's going to put a little bit of pressure on some of those spreads. So now when we look at flows coming from the Middle East, you can see that Iraq is fairly stable. Same with the UAE and Kuwait, but we did get a big drop in Saudi exports. So this is going to be an interesting one to watch, because was that drop something because it's a timing delay, or are we going to see that snap back up? Because then you might think, well, they replaced it with refined products, but that is also down as well. So this could be just a little bit of a lull going into the end of the month, because we did see some sizable increases, and in order to hold true to their guarantee, they had to drop off into August, and then into the end of August, and then pick back up in September. But this is a big headwind when you look at China, India. Some of the things that we were talking about is that China is going to front run. You know, there was about 27% of their second quota of export quota that was still to be used. We're still waiting for the third, and so this is a little bit of front running. India is still at the high end for exports, and again, it's just that balancing act where, you know, they were buying cheaper crude, might as well try to go capture this margin in the market when you look at refined product, because they're buying cheaper crude so they can make product cheaper, but then sell it at the going market rate and collect that premium. So that's also going to put pressure on who else is exporting, because you're not going to get the same level of demand, which you're seeing here. So Kuwait had a sizable drop in terms of exports, you know, and a lot of this is that close down of east to west, because Kuwait was sending a lot of this product into the Atlantic basin. That has slowed down, so you're starting to see some of that bunch up. You know, Saudi is still at the higher end. It's come down just a bit. Same with the UAE, but you can still see it's trending to the upper quadrant of it, and that's again helping to offset a bit some of the slowdown in exports of crude, because you're exporting more of the refined product. This puts it into perspective in terms of where Europe struggles to sustain diesel imports, and it's just because of price. I mean, they're trying to be price sensitive. They're trying not to be price sensitive, but it's hard not to be when you look at some of these different pivots. You know, the U.S. had a nice little bump going in as we went through the summer. We do see that slowing down a touch. You can see Saudi Arabia was elevated. That's come down a bit. And then Kuwait is the one that we were talking about where we see that dropping off. You see it got a little bit higher. So as those ARBs adjust, that's what we're going to want to see and look at this point in time. Now, just rehashing what we talked about from last week on the Iranian side, this is another reason why you're seeing a bit of a slowdown, because there's a ton of Nigerian barrels out there. They still have over half of September remaining, and they're supposed to announce October, but yet they're still sitting on, and there's 7 or 8 trading days left in August, which again is going to put a bit of a cloud over what is going to happen going forward. And that's going to be an underlying problem here. So then when we start looking at the Middle East is starting to see a little bit of those increases going into the floating storage in the Middle East. That is trending up. You had the big drop, but again, we're still seasonally speaking at the higher end. And given some of the slowdown in buying, that's why to see Saudi start to drop off, well, again, they're trying to show less in floating storage, because again, this is what they're trying to manage. This is going to be a pivotal one to watch, especially if we break above back to the highs, because we've already started to see that in West Africa. Now, this is interesting when you look at NAPHTHA versus fuel oil, because you're starting to see NAPHTHA creep back up, but fuel oil is topping. And this is where we do see fuel oil pulling back a bit. And this is indicative and a bit supportive of what we talked about when you look at those flows from China, from India, starting to push this back down and capturing some of that spread that they were able to get. The U.S. exports have remained at these elevated levels, but again, we're still not going to see a big break higher. It's just there's now support at these levels. We were expecting exports, and this was back in July. We expect exports to slow down as we got into the summer, into the fall months. But because of the increases in OSPs from Saudi, because of the demand, because of that demand that was created, that reinvigorated buying from Asia, which we thought was going to drop off and slow a bit. Europe, we always thought was going to be fairly firm. But again, because Asia was supported once again, that's keeping us at this elevated point. Then when we look at crack spreads in Asia for the gas oil side, you can see we're breaking back to the highs. We do think this is starting to top out. You're starting to see more barrels chase this crack. So that's where we do think this is going to put a little bit of pressure and pull it back down. Now, when we look at the Dubai Brent swap, here you can see how cheap cheap Brent is in comparison. And yeah, it's just why we see the Middle Eastern flows remaining very slow. And a lot of these headwinds, which is something that I think the OSPs have to address when you look at what Saudi's going to do next. Asian floating storage is staying at the levels that we saw in 2022. We do see this creeping up just a bit, but at the same time, we do see a slowdown in Chinese imports. And this is an important piece to watch, because one of the things we were saying is there's always that slowdown period. And you typically have the Chinese refiners that front run the new export quotas, the new import quotas. So now that you already have these in motion, you're going to start to see some of these new purchases slow. Then they'll start to pull a little bit more out of storage, a little less off the water, and try to, again, help push down some of that pricing. Now, this just kind of puts it into perspective. When you look at the activities to date, you can see that the teapots have picked up a bit, or the Shandong, but again, remaining at the lower end, while the state refiners remain elevated, similar to what we showed last week. Now, when we look at driving activity, it's tracking very closely to 2022, which is not a good thing. We thought we were going to be higher, but it just gives you an idea of, again, the headwinds that the consumer has and how we don't see that much activity within the Chinese markets. West Africa floating storage pivoting back up. Angola has cleared. Congo has a few that have been that are being resold. This pickup is Nigerian based, which is why we do see price reductions coming out of Nigerian barrels. And it's not that, they're still going to clear at a higher price than before Saudi extended their voluntary cuts, but it's still going to be on the downward side. It's still going to, again, be at a price below where it currently is, as we do have a bit of that overhang in the physical market. Crude and product exports from the U.S., gasoline exports dropped 51,000 barrels a day. Again, it's going to stay above the 5-year, but just track a little bit closer. Distillate had a small increase of 15,000 barrels a day, but it's still 179,000 below the 5-year average. And we see that trending a bit further to the downside as that ARB into Europe is under pressure. Propylene, increased 62,000 barrels a day, still going to stay at the high end above the 5-year. And then total crude exports, again, staying at that higher end of 4.28. At 4.25, we were saying we still think it's at 3.8, 3.9. It's moved up a bit just because of that Asian flow, and we continue to see those exports remaining elevated. This just puts it into perspective. Again, gasoline exports are going to track closer to the 5-year average, but still remain in the upper cloud region. When you look at distillate, again, it's fallen below the 5-year average. We see it staying at these levels below the 5-year average, essentially kind of cutting through the middle of that lower band, which is just because the ARB is fairly a lot of headwinds going into that region. And then you look at crude oil exports, again, staying at the high end. You can see it's right where we were in 2022. And then when you look at propylene, still maintaining that record-setting pace. And then ethane exports, again, a little bit lower, but still staying at that higher end when you look at it against the 5-year and average it for, especially what's to come. Now, when you look at Fujairah had a drop of 1.237 million barrels. Right now, there's 17.6 million in storage. Light distillate dropped 1.269. Sizable drop. The East of Suez gasoline complex softened a bit. And that's why, we saw a big push, but we do see this closing rapidly, just given the amount of product shifts in general. You did get some, the hurricane that hit into California in that region, so we did get a slowdown in demand over there. But when you look at some of the, we are getting some refiners that are going into planned turnaround early October into mid-November. So it's going to be interesting to see how they build this up ahead of some of those turnarounds in the region. Middle distillate fell 477,000 barrels. to 1.946. The east of Suez ultra low sulfur gas oil market was seen to be weakening. And again, it's just timing. So we did get these draws, but we do see these flows coming through. Supply is expected to be lean because there may not be as a lot of gas oil exports from China, but it's just going to be based on that third batch. But right now we've seen some sizable moves. Sinopec's petrochemical will have its planned gas oil outflows in August due to limited availability of export quotas. So that's why the export quota is going to be really important, because we do have a lot of barrels sitting there that could easily come back out. China boosted gas oil exports to its key Asian outlets in July with more than 560,000 metric tons, or 4.2 million barrels. And again, we do see that remaining elevated, which is going to put some of this back into storage. Heavy resid rose 509,000 barrels to 9.295. And what we were saying is weaker flat pricing, not as much shipping. Shipping's stabilized. It hasn't really exploded higher. And that's why we do see builds continuing to this region. When you look at Brent time spreads, the backwardation's gotten a little bit softer, just because of what we've talked about, and some of the headwinds in the physical market. We should see this come down a bit, but there's still enough in terms of the differences and the distinctions to keep backwardation still in place. When you look at some of the shifts right now, so Senegal offered one cargo each of some of their crudes. So Gerasol was at $5.20 versus dated Brent. Plutonio was $3.10, and Saturno was $1.50 above dated Brent. That's kind of the spot offer price. So now we want to see where some of these are, because that is a bit elevated. China was a spot buyer, but they want to see, this will be interesting to see as we have Nigerian cargoes available in September. They're about to load they're about to announce their October. Does that help kind of pull down some of these pricing? Angola plans to ship about 1.18, a revised schedule release from last week. Many Nigerian cargoes for September remain unsold just a few days before the October program. With at least half of 41 cargoes for September yet to find buyers, which is why we do see some of those pricing adjustments getting moved into the market. Europe is their crude is at the seasonally adjusted highs. It just took out the high from 2018. This is what we were talking about, where we saw a lot of builds. There's a lot of headwinds on an economic basis. You're not seeing a lot of demand. You're seeing slowdowns when you look at activity points, which is why, from a refining perspective, for refined product demand, which is why we've been saying we expected barrels to continue to amass. When you look at gas oil, there was a small draw of 4. When you look at gasoline, big build of 131. So again, you're seeing a lot of these increases. Gas oil continues to remain at the lower end, but just given, again, shipping rates, insurance, you're starting to see a little bit of that balancing act in general. Gasoline back to seasonally adjusted highs. This is, again, going to support more exports. It's just going to come down to what are shipping rates and what is the price differential between Europe and the U.S. And that's where, because somebody asked a great question of, well, why are prices still so high in Europe if there's so much in storage? And it's like, well, they still have to buy the crude, so they don't want to, have a loss. So they'd have to then pay higher prices for the crude, give you cheaper pricing, and or they're just waiting for the U.S. markets to open, which are at a higher price, better valuation. So again, that's why we see this, and we do expect a lot of this to end up on the East Coast. Fuel oil continuing to stay at the highs. It's where the highest that we've been at since 2020. That's going to continue to cycle through. A lot of recracking. There's no west to east flows right now. The arb is closed. And a lot of that is just given, the shifts that we're seeing, which is capping some of those flows. So there isn't any real arb east-west, west-east at this point in time. Then when you look at what's happening in Singapore, total stockpiles have flatlined a bit. We do expect that to start to creep a bit higher. And a lot of that is going to be led with light distillates. We're right around where we were in 2021. We do expect that to go back up. Not in a huge way, but in a very steady method when you start looking at how those arbs are situated. While middle distillates had a build, we're still below where we were last year and still at the second lowest we've ever been at, which is, again, why there's still that support. But the cracks, even though they're going to stay supported, we're by no means saying the cracks collapse. It's just there's more barrels now trying to capture that, which is going to push a little bit more into storage. Fuel oil, heavy resid, heavy disty is going to stay very much range bound. This is going to be that balancing act because can you recrack it? Can you do something else with it? And as that ARB remains closed, we do expect this to drift to the higher end of 2023 storage levels. The North Sea had a bit of a drop in floating storage. We do see that just kind of bouncing around at these levels. And then when you look at Europe is kind of flat, but still at the seasonal average. So there's going to be more opportunity to see this onshore storage remain very elevated and some of these cargoes going from offshore back to onshore, keeping Europe very well supplied with crude. So that's what we have for you today. If you have any questions, please let us know, and we hope you enjoy the rest of your week. Thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.